Hey everybody, this is DayTraderRockStar, and this is the high probability watch list and market radar for the week of October 19th. We're halfway through October, heading towards Thanksgiving. Wait a second. Heading towards Halloween, I should say. That comes first. That's a much cooler holiday. Not really a holiday, but a cool one anyway. What a week. Let's jump right into this. The first part of the video will be a kind of a review and a market radar. Basically, the market radar is a discussion of technical discussion, not where I feel the market is going, but based on technicals, based on high probability indicators, what these indicators are telling us, and from that deducting where the market's going to go from that point. And we're going to start right off just taking a look at the S&P here, and you know what? I'm saying that everything is coming through really clear. Yesterday and the day before, we expected maybe to see that 60-minute time frame, explode out, and that's exactly what happened. We had this nice 60-minute rotation up here, and then we got overbought, and we started to see, very careful. I said, be very careful. This might actually start to embed. If we start to stay up here in this shadowed box area, there's usually a sign of strength, and we're not really. It's too early in the game to tell you if that daily, now the daily is really confirmed and embedded stochastic, and that's bullish in itself too. So right now we do have a very bullish daily, and the 60 minutes actually quite bullish, yet overbought. So the timing factor here comes into play a little bit more now. Basically, we could gauge a momentum shift and stuff, but once you start to get embedded, you're gonna have a harder time timing the pullback. So we use these as exit scenarios more than anything else, because right now it's telling us something different. I would rather have this rotate back down, come all the way back down, bounce back up, and start to reestablish some kind of rhythm to this. Once you start to get embedded on the 60 and the daily, you have to just say, hey, maybe this is not the right time for me to try to tackle this. It's not a signal that I want to see. And a signal that you want to see is an opportunity to get in. So right now is, you're pushed up here, overbought. You're overbought on the 60-minute time frame. But let me tell you this: I expect this market to go higher. I was expecting it since here, and I'm still optimistic going into Friday, and that's today. So when this comes out next week, depending on what type of news is out there that might move the market, the signal that the market is kind of relaying right now in this time and in this age that we live in, and all these issues that are upon us. The market is actually holding up pretty good, and we'd like to look at that daily time frame. I mean, this was our correction. This was a correction. You might want to blame China for this. Chinese, the economy being scaled back and forecasts being dropped and everything else that was going on at this point. And then we had a nice little perfectly formed wedge pattern, a textbook wedge pattern. So we talk about textbook patterns all the time. Things that we want to trade, this is one of them. The wedge pattern. When we say it, what it looks like. It doesn't go sideways and go straight up and down. It has this really nice angle to the lines, and it also breaks down in that very key area, 65 to 75% area of the pattern. So it's that's great when we could continue to look at this and see this, and feel it. Just feel the whole thing out here. We came down to a double bottom. What really did was we got back oversold on the daily, and we got oversold on the 60. That's a high probability 2 time frame setup. Combined with that, we actually had a 60-minute divergence, I believe, at one point. Probably on something. Maybe it was back here. Yeah, I think this was the divergence back here. We had 2 divergences right here. On the 60-minute time frame. Recently, right now, where we are right now, no divergence, but you're still seeing that embedded stochastic. But when we started to turn back up, and we had the daily, we also had the 60 divergence, pretty clear-cut divergences too, right here, and that really just marked off the, marked off the biggest move in the market. It also marked the breakout of the channel, which whenever you see divergence inside that channel, it typically marks the place where you're going to actually start to break out. So, really organized. Right now, it's, again, a little extended. You'd rather have something that's in your wheelhouse right here. When we call it, a pretty decent sized rally. Here, I still feel that we're going to grind up into this important level. We have an old trend line retracement. We have another trend line retracement. We have the 200 period moving average, which we're pretty much right on there. There's so much going on here. We're also on that trend line retracement here. These two blue lines. So we're starting to get into that zone. The more I look at it, it could actually start here, that 2030 area, right up to about 2060. I hate to give you that big of a range, but I would go a little bit higher here. I think we have a shot at getting up here in the 2040 now. I'll move my. I think I'm looking at 2040 to 2060. Yeah, I like the lower target a little bit better right now. So that's it on the radar. We're not gaining much. The 60-minute time frame going into Monday. Hopefully we end up like this. It's about 2 o'clock. The market's pretty stable. It's pretty non-existent today. It's not really selling off. It's not doing much. So we're gonna take it that we kind of close the way we are, and right now that 60 is bullish going into next week. The 5-minute time frame. You know what? There's two things here. There was a failure, which was right here, and when you do get a failure and a lower high, lots of times there's an extended move down that causes this to bounce and then fail one more time and kind of coil up as we make our way down. So whenever we have a failure to rotate back up, yeah, it's weaker than average. And now that this is getting oversold again, I would still say that the failure here is a little bit stronger. We might get a little bounce, but is it worth? I think it's a better short. But this is on the 5-minute time frame. This will be blown out of the water tomorrow. In 10 minutes, it'll probably be finished. We'll know what's going on here. So not trading the 5-minute today. I should have opened the Coke on the mic. It was a good sound effect. But this is my Coke. I have to have something to drink during this watch, so it's a lot to go over. That was loud. So I'm not going to waste too much more time on the 5-minute. The 60 daily, we already discussed that. That's pretty much the market radar for early part of next week. I think we have better setups right now we're going to talk about. Let's start those off. Each week I send out a what's called a high probability watch list, and same thing we look for in the futures trades. We look for on the stock trades. These patterns, these methods, these what I call them playbook plays, and we look for them just exactly as we look for them on the S&P. So we're going to review for the last couple of weeks here some of the setups that have triggered and hit their either objective or stopped out. We'll take a look. None of them stopped out, so I know they all hit their objective. So we're just going to look back, kind of update you on what exactly works in this market. All right, and what we're looking for. We talk about wedge patterns all the time. We take a look at HP. HP was that really a textbook wedge, and we talk about a failure before. Remember I talked about a failure? Sometimes you get that failure, it'll come back down oversold, and then bounce just to fail again, and this would continue to make that. That's what we were just talking about before in the 5-minute or whatever we're looking at. This is an HBS setup from last week, and you can see the wedge pattern blew out of here just as expected, right in that zone. It really pushed much higher than the profit zone. I know a couple traders took it up to 58, but right now we're in a little pullback, and that's an interesting thing. I keep these on here for review, but also to kind of go back and look at it because the chart will stay active. This chart will stay active, so we're actually seeing how it's looking. So I like getting back into stocks we've traded. If there is a setup here and we get a pop, and then I keep it on the watch list, or I keep watching it for the next couple of weeks to see if there's something new develops on it. That was HP. Let's go to the next one. All right, then we had CSX, and CSX was a standard, a nice pullback and a quality name, kind of a best of breed in the railroads. Nice pullback. The 24th of August was the capitulation move, that corrective move in the overall markets. All these stocks got hit, but this one bounced back pretty fast and went actually above where we gap down. If you look at most of the stocks out there, they all gap down, and the stock hasn't come back up to those levels yet. It's either bounced a little and then gone sideways, or even retail such as this one got through that recent gap down on the 24th, the low, got back through that much higher, really much higher, and then finally gave us a nice overbought level with a reversal candle. Gives you that opportunity, at least, to say, hey, this is where a strategy short should be come into play. Would be a stop above that candle line, take the short, then manage it on your multiple time frames. In this case, we're picking this up here, and I said, wow, this has actually gotten into a nice, just a nice pullback, because we've gotten oversold, but we're holding off the recent lows, and that in itself is a sign of strength. In a downtrending market, typically you're going to make those lower lows, and with the lower lows, you're going to make a stochastic low. So you already made a stochastic low here, and we didn't get back to recent lows. So there's something there saying that there's probably a good W pattern that's going to play out here. So, and here you go. You can actually see, came right in here, right into the buy zone, chopped around a little, and then made its way right back up. And again, we follow these stochastics, which don't update on the trading view chart on the when you go into fast forward mode. So I can't tell you, but I'm pretty sure that the stochastics rotated back up here. You had another opportunity to actually short here, and this is where we are right now. So great trade setup there. Next one, that was a couple weeks ago, and I'm just saying because I want to be taking these off the screen. That's why I want to do a final review of them. The AMT. AMT is, again, a nice 1-2-3 pattern, especially when you see these longer candles and you really start to establish a trend line, and underneath the trend line just happens to be a perfectly parallel channel. Then you start to see this kind of a divergence play out. And we noticed that divergences usually happen when the price here spikes lower, reverses, and kind of leaves this candle. It's a very fast move, and the quickness of it really turns that the momentum doesn't really get picked up on the oscillator here. You actually see it just continuing its way, and it's like momentum has never shifted. So it's usually a great buy signal to see that. So this went into this pattern as a lane divergence setup, more than a 1-2-3 pattern. And you can see the explosive move out of this. I mean, this ended up turning back up. It ended up being a perfect. Let me see if I can bring it up on the other chart here. AMT. Yeah, that's on the daily. You don't really see it. I'm going to say you don't really see the divergence as much as a 1-2-3 pattern, but that's what we're trading it off of. It looked good. Just I don't know if it would have been so clear for everyone. Either way, look at where it pushed right up to. An old channel line, broke down from it, popped back up. We're chopping around this zone. I mean, this is coming off the watch list, so it's just want to review that. All right, the next setup was CBS. CBS was a reversal candle. Stochastics were oversold, started to turn up, so we had a little momentum, and it was really about that outside day. I picked it up on the outside day at $39.99, and as you can see, it went right through our profit zone up to 44. Still looks actually quite good, with the consolidation here, but another just key. And again, the reason I'm reviewing these, I want to make sure that each time we put an HPS setup, or I want to explain what the indicators are lining up. We have to have 3 or more indicators lining up. That was our old school definition when we talked about how the whether stochastic data is that set up in the right areas, or any trend lines or recognizable patterns, support and resistance, moving averages. And we added reversal candles. So we had the stochastics, we had the candle. I think we actually had something else going on here. Might have even been a small wedge, but it was good enough to look for that reversal candle and see this as a better opportunity after being down for so much. So good trade on that. We bought the shares at $39.99, and I ended up selling them at $41.90. Now, I took it off right as it was triggering 41.90. So what happened probably is you get the trade alert. I get the trade alert. And then by the time I, get the order set up and stuff, it was just down about 10 cents. But I tried to trade it right around the 42 area. It did move a little higher, but that's fine. The important thing is recognizing when the stock is going to move and, and just having a plan, taking the emotions out of it. All right, well, that's the end of the review section of the video. And again, as you can tell, HPS, criteria, the setups, each one of those playbook plays are really what we need to get on this list. I mean, we're not going to put anything else on that list. So this next part is going to be a members only part. We have 1, 2, 3, 4, 5, 6, 7, 1, 2, 1, 2, 3, 4, 5, 6, 7 setups for next week. 7 setups. Some of them are active. Some of them are not active yet. Again, those videos can be found in the HPS section of the site on the dashboard. The HPS section, you'll see that each one has individual videos attached to it. But I'll also talk a little bit more about some other stocks in the next part of this video. For those out there not members of Day Trading Radio, give it a shot. You can try it out for 2 weeks for free. Just go to the site, click on 2-week free trial, and you're good to go. If any questions, that sounds good. All right, so that's it on this.